I think it's good news, right? I get that you look at the headline and you say, wait, how can he say it's good news given it's the highest inflation reading since April of 2023? Well, it's good news because it wasn't worse than we thought it was going to be. The whole thing with inflation right now is it sustainable or is it a spike? With oil falling so hard, investors are going to look through these near-term inflation indicators as long as they're not too bad. And this definitely qualifies as not too bad. And so the logic goes with oil falling, we're going to see these inflation indicators probably peak right around now or next month, and then begin to decline into the third quarter and into the fourth quarter. And that is going to take the pressure off the Fed to hike rates. I think 3 rate hikes this year by Bank of America is aggressive. Is it possible? Sure it is. But I think that the inflation numbers we got this morning should definitely be viewed as not as bad as feared. And in this type of market, that's a good thing.
Inez, catch us up here, because I hear you, Tom, and I hear what you're saying. But at the same time, we did have Kevin Warsh come out with a more hawkish tone. So is anyone on the street worried that this could add more fuel to the fire, Inez?
Well, you do have that BofA call that they're expecting 3 rate hikes, 25 basis points by the end of the year. But you have most of Wall Street, quite a bit of the Wall Street firm banks, Goldman Sachs, expecting them to hold rates steady this year. JP Morgan also expecting to hold rates steady because of the points that Tom just made. Also because, of course, of energy prices that are coming down. And so the Fed would see past this sort of spike that you've seen in inflation. Keep in mind also that Kevin Warsh talked about these task force. So even though this PCE came in line or perhaps a little bit better than expected, you still have the Fed that is going to be poring over this data and figuring out how should it be reading data in the future. So that still remains to be seen.
And then, as you pointed out, something that's really important this morning, because we are seeing oil futures move lower, and Torsten Slok saying in a note yesterday that this could add more to Americans' wallets. And Jared, I know you're watching that as well.
Yeah, I got a nice chart from Torsten Slok, chief economist over at Apollo. And let's show this on the Wi-Fi Interactive, because we had been seeing oil and 2-year rates kind of move in lockstep. But here's the key thing. When we first saw these elevated energy prices, we thought this would feed into inflation, but it would be somewhat transitory. And so the irony is that now that we have oil prices and they've dropped so much into an overheated economy by some measures, guess what? That's going to be even more inflationary. So that right part of the chart where those 2 lines diverge, that happened right around the April CPI report. And you can see that 2-year rates have gone higher. Meanwhile, the price of oil has gone lower. 2-year rates are kind of a proxy for where the market might see the Fed's short-term rates going. And so this just tells us that there's an increased chance of the Fed hiking rates. And in fact, I went back and I looked at the Fed rate hiking odds from last Tuesday, right before the Fed meeting, right before Warsh's first meeting, and they are now about half a rate hike more higher. So in other words, we were about at 0.8 of 1 rate hike. Now it's 1.3. That's a half rate hike, and that matters in only 1 week. So I think we're going to be hearing a lot more about this. This is the one thing that the market is kind of scared of, is that the Fed has to hike more than anticipated.
At the same exact time, given that oil is falling lower, I mean, this could have ripple effects for gas prices. It seems like we're already seeing that. I was reading a post on X this morning from Patrick DeHaan over at Gas Buddy, and he actually confirmed that gas prices are now falling faster than they did when they had peaked back in 2022. Inez, could this mean good news is coming for the consumer? Could we see lower prices at the pump even maybe sooner than expected?
Yeah, sure. I mean, you have quite a bit of analysts that are saying that by July 4th, you're going to see gasoline prices at $3.75. That's still the second most expensive July 4th, apart from 2022, when you saw those gas prices at around $4.80 per gallon. But nevertheless, it is good news that gasoline prices are falling faster than back in 2022. As you noted, almost 2 pennies per day that you're seeing those gasoline prices fall. falling. And look, this is what has been sort of choking the consumer, these higher gasoline prices. And so, yes, the theory is that if they're spending less on gasoline prices, then they have more to spend elsewhere.
Inez, let's stick with you, but let's switch gears a little bit here, because one of the top stories today is that Micron report. I mean, this was an absolute gangbuster report, absolutely stellar, pushing the NASDAQ higher this morning. Walk us through some of those results, but especially that Q4 guidance that really seems to be boosting analyst outlook here.
Yeah, look, and it's the magnitude of the beat that really is driving this stock higher, that it shocked investors. The fiscal fourth quarter revenue guidance coming in at $50 billion versus estimates for $43 billion. Also, earnings guidance of $31 a share. The expectation was a little bit more than $25. And their gross margin, their adjusted gross margin, that topped 84. It came in 84.9%. That beat estimates of 81.83%. So just the sheer beat of all of this has been driving this stock higher. And also the fact that they're saying that there's no line in sight of when supply catches demand. So that speaks to pricing power. This is all of what the street wanted to hear, a pristine report and guidance.
Tom, is this boosting optimism around that AI trade again?
Absolutely. You know, over the past couple of days, you've sort of, the market has gotten itself in sort of a negative feedback loop, right? Saying, is this sustainable? Can the spending continue? Is there enough capital to continue to fund all this? And Micron came out and basically said, yes, there is. And that's turning sentiment around. The most important part of the Micron earnings were really they're referencing these strategic customer agreements. The whole key around the memory boom, much like inflation, honestly, is it a flash in the pan or is it sustainable? Micron is growing earnings at like hundreds and hundreds of percent, but the stock only trades at a 10x forward multiple. The S&P 500 trades at a 20x forward multiple and isn't growing earnings nearly as fast. The reason Micron and NVIDIA are cheap is because investors are concerned that this earnings boom won't last. If investors believe it will last, which Micron's earnings helped reinforce that idea, then this market has a lot more room to run.
And we also are seeing other chip names really soar above this. I also want to get to a bit of a different focus today, an unusual stock that we're seeing pop today. Tom, I want to get your outlook on this. What is going on with Wendy's? Is this another meme stock rally this morning?
Listen, I'm all on the Save Wendy's train here. I love their hamburgers and their Frosties. But I think that what this shows us is that animal spirits are alive and well in the market. You know, when the market is turning, when investors are sort of turning sour, when the market is turning a bit negative, you don't see things like this happening. Now, as far as why Wendy's is soaring, there had some management changes that have had success. The new management coming in has had success turning around a company called Potbellies. And I think that between the social media kind of movement and the fact that Wendy's is heavily shorted led to a really awesome move for investors yesterday. But I think that for people that are not long Wendy's, I think the bigger point is this shows us animal spirits are still alive in the market. You need that to fuel a continued bull run. And I think that it generally is a positive sign for sentiment.
Jared, really quickly, what's your take on this rally?
I mean, I'm looking at the Wi-Fi Interactive. Wendy just turned positive for the year, but this is probably a little flash in the pan. It is 2021 kind of echo-ish here. So I'm thinking, if this has legs, we're going to see this continue for weeks. But if it is just a meme stock trade, we'll probably see it peter out in the coming days. So just to give it a few days, we'll see.
All right, we'll have to watch this one. But in 2021, Wendy's did get a little bit caught up in that meme stock rally as well. So it's interesting to see this happen yet again. Huge thank you to all three of you. Thank you so much, Tom, Inez, and Jared.